What's going on? What's going on, team? Welcome back to another week. Welcome back to another Money Monday. This week, what we'll talk about is we're going to talk about the economic events that happened last week as to what happened, what those results were, how those came in, how those affect this move for this week, what we believe is going to happen this week. We're also going to take a look at /NQ, which is the NASDAQ. We'll take a look at SPY, which is the S&P 500. We'll break down the technicals on both of those to give you guys a little bit more confirmation as to what it is that we think is going to happen and why we're preparing for the move that's about to happen. So if you guys want to know what that is, stick around. I'll let you guys know, and let's jump right on into it. So first thing we're going to do is talk about what happened last week. Last week on Tuesday, we had the core CPI come in. Month over month, we saw no change really. Year over year, though, we were expecting a 5.5% move. However, that was that move right here, that 5.5% move. We saw 5.6 come in, so it came in a little bit hotter than what the Fed was expecting. Core CPI in January year over year came in at 6.4, and 6.2 was expected. So again, a little hotter than it was expected to come in for January. And so that's basically kind of what happened with the core CPI. That's the consumer price index. And so that's in essence kind of from the consumer side, how's inflation doing? And it's obviously hotter than what it was expected to be. And so if you guys remember back to the talk when Jerome Powell was at a conference, he was talking about kind of inflation and what the plan was with that. He was saying that if it does come in hotter than what's expected, he does expect to raise rates, maybe a little more aggressively, but he really had to see kind of how it comes in for him to be able to make that determination. So obviously we're seeing core CPI for the consumer side coming in a little bit hotter. And then what happened next after that was we actually saw on Wednesday, we saw retail sales, and those sales were actually 3% when 1.8 was expected. So you might think, what does retail sales have to do with inflation or kind of with the Fed? The thing is with that is if people are still spending a lot of money, then it's really showing that inflation isn't slowing down. People still have a lot of money to spend, right? And so that's giving the Fed a signal of the fact that they have not yet tightened, the policy enough or haven't gotten a grip on inflation enough for them to slow it down completely. So the last one we saw, the last rate hike we saw was 25 basis points. For this upcoming Fed meeting that's happening on March 22nd and 23rd, I believe. And then the announcement is going to be on the 23rd after the Fed FOMC meeting. So right now we have 50% or 50 basis points on the table as well. So we dropped from 75 all the way down to 25, which was the last one that they raised. And now they're thinking about 50 again. It might be 25, it might be 50. I'm curious to know what you guys think. So if you guys have an opinion, drop that in the comments below. I'm curious to see kind of what the general consensus is as to what you guys think the Fed's going to be doing. Are they going to stick to 25 and kind of give it a little more time to see if inflation does come down next month, or if they're just going to tighten a little more and increase rates a little more? That way, they ensure that inflation is under control. So that's what happened on Wednesday. And then Thursday, what we had is we had the PPI come in, which is the producer's price index. And in essence, that's from the producer's side of things as to, hey, what does X cost to make? And is that going up in cost versus not, right? And so what those numbers came in at, 4.9 was expected, 5.4 came in hotter than expected. And obviously month over month, that was year over year for January, month over month, 0.5% difference, right? 0.3 was expected. So again, hotter than expected, hotter than expected. One more thing I do want to say about the CPI, even though it's coming down, right? So we came down all the way down to 6.4. The previous one was 6.5 for the previous month of December. So we did come down a tiny bit, but the thing is, what you guys have to understand is the market prices in what's expected, right? So if 6.2 is expected, that's why last week we saw that run up in the market. We saw that price increase. I'll show you guys that. I can actually show you that right here. So right here, what we saw was that run up in price. And that was right after, they announced the 25 basis point rate hike. That kind of gave people a little more confidence, I guess you could say. And then on top of that, inflation was coming down, right? The rate hikes wasn't as intense, right? That week before the last month, we did actually hit those expected targets. And now we came up to this consolidation period right here where we're at. We'll dive a little deeper into the technicals of this thing once we finish up with the economic data. But we are seeing that consolidation. And what we're seeing here is we're seeing that, inflation is coming in a little bit hotter, right? Those expectations are not being met. And in essence, what that's giving us an idea of is that not only is the Fed considering to raise rates a little bit more aggressively, so potentially 50 basis points, but that's also giving us confirmation that this little run up that we saw, this fake out move that we saw to the upside above this 180-day, 200-day simple moving average, which is this yellow and green line, could have been a fake out. And if you watch into our previous video, the one right before this, I believe, we actually talked about this fake out happening, right? We didn't expect it to last this long, I'll be honest. But with all the data that was coming in the previous weeks, it made sense that we continued to see this run up, right? We saw that retail investors were more optimistic about the market. And now we're seeing this data come in, and now that's giving us confirmation that, hey, maybe this really was a fake out and people were just being too optimistic and inflation isn't yet tamed, right? So that's kind of what's going on with the information and the economic data for last week. What we have coming up this upcoming week. So this week, we're going to take a look at some important key economic events to pay attention to. The first one is existing home sales. That's going to be on Tuesday. Obviously, we're closed today on President's Day. So Tuesday, existing home sales, that's one to watch out for FOMC meeting minutes. So that is an important one to dive into if you guys are interested about reading the minutes and kind of understanding what's going on behind those closed doors. Not a lot of people pay attention to that. So, the more you dive into it, the more of an understanding you're going to get. And that way you're going to be able to make more, I guess you could say, educated predictions or assumptions that you can take action on. Something like what we're going to be talking about when we dive into the technicals and what we believe we're going to see happen this upcoming week or the next 2 weeks. So Thursday, we got the GDP coming out quarter over quarter. That's one to watch out for. And then crude oil inventories. And then the 7-year note auction, not super important, but you got the bill auction, the 8-week, the 4-week, and then the 7-year note auction. And then Friday, one to watch out for is core PCE price index. So one to pay attention to here as well. So that is for Friday, and that's pretty much wrapping it up. We also had new home sales on Friday as well to pay attention to. So that's pretty much the data to pay attention to this week. That's coming up. And now let's go ahead and jump into the charts and talk about /NQ, which is the NASDAQ market. We're looking at the daily chart here. And as you can see, every time we come up to this 180-day, 200-day simple moving average, this is basically that big trend that everyone has been talking about. And so it's fairly obvious. And so when we did see this push up to the upside here, a lot of people thought that we were finally breaking out. And one thing that you guys will note in some of the previous videos that I've made is that we didn't have that supporting data or supporting evidence to justify us breaking out, right? We saw Jerome Powell talk about, inflation is slowing down. We're seeing some deflation, but in essence, what deflation means is we're just seeing inflation at a slower pace, right, than it was. It doesn't mean that it's gone, right? And 6.4% is a lot, right? If you really think about it, it's a little lower than it was the previous month, but it's still high, right? So at the end of the day, we didn't have the data to support, a breakout and a change of trend because we haven't seen inflation get fixed yet. And so that's in essence kind of, what happened when we saw this move to the upside. And we've been preparing, we've been getting ready. If you guys are on the team, you guys know that we have been, putting ourselves in a position where we can take advantage of this drop that's coming, right? Because the drop is more likely at this point, the drop was more likely to happen than a push to the upside just because of the data, right? And the markets follow data, right? And so at the end of the day, if that data is coming in and it's telling us that, the market's not supposed to be doing too hot, but the market is doing hot, then there's something off, right? And we want to be taking advantage of what the facts are and not what we want the market to be doing. And that's what happened here. A lot of people want the market to push up at this point because we've seen such a huge pullback, but it's just not time yet. And so at this point, what we've seen is we saw that push up, that bounce off of this 10,825 level here on the NASDAQ, the /NQ. We pushed up, got into this consolidation phase. And what happened last week that I do want you guys to note is we closed below this baby blue line, right? And what this baby blue line on the daily chart is the exponential moving average. And what you guys can note is every time we close below it, we have a trend to the downside. Closed below it right here, broke below it, closed below it, trended to the downside for quite some time. And so now what we're seeing this break below. This entire time, we've constantly kept bouncing at this 100 or at this EMA. However, this last week, we actually closed below it. So that's the first sign of the fact that we are going into a sell-off. The second sign is obviously we were maxed out here. We weren't making any progress because we were consolidating. And obviously the RSI is pushing to the downside. Price action has not yet followed, but it is about to. And then obviously we saw the MACD cross here on the MACD to the downside, and we have just begun. So you might be asking, what are the levels to the downside for us to be watching? So the first level to the downside is obviously going to be this 180-day, 200-day simple moving average. From current price points to down here where we're looking at about 3% move on the NASDAQ. That would be the first level. And that would probably coincide here with the 50-day simple moving average right here. And then after that, the next level down would be that first level of support right here would be at 6.68% at 11,524. And then after that, if we do break below that, which that should be a pretty strong support level as well, just because that is the critical volume profile level. However, I wouldn't rule out the fact that we might go back down to the support level that we've been at quite some time, right? So we came down to the support level, bounced, came down, bounced, came down, bounced. Wouldn't be surprised to see us coming down right here. So what we are looking at to take advantage of this move is we're looking at SQQQ, which is short, excuse me, which is a short for the NASDAQ, right? TQQQ goes up when the market goes up. SQQQ goes up when the market goes down. So what we've been preparing for, basically, ever since we approached this 180-day, 200-day simple moving average, was the sell-off that we were expecting to happen. Like I said, we didn't expect this to last this long, but at this point, we're fairly confident that the next week or two, we're actually going to be seeing this sell-off take place. So that is our game plan. We are expecting this sell-off to happen on the 4-hour chart. This was the daily chart, 4-hour chart, very similar setup. On the daily chart, we are seeing the same thing, right? The 4-hour chart, we are trending to the downside, if you guys can tell, slowly, but we are trending to the downside. The MACD, the RSI, still selling off. So I wouldn't be surprised to see tomorrow might be a little iffy. We might see a little bit of a push to the upside to retest that EMA. So if you look at the daily chart, we might see this push up right here. From where we're at right now, we might push up to the top of that EMA. So from 12,381 up to that EMA at 12,426. just to make sure that we actually are breaking below it. And if we get rejected by that, that's what we call confirmation. If we get rejected by that, we're absolutely seeing a sell-off happen. So that's kind of the /NQ. Taking a look at SPY on the daily chart, going to be very, very similar to what the NASDAQ is. On the daily chart, they tend to follow quite similarly, right? And so that's kind of what we're seeing here on the daily chart as well. Held above the EMA, and then we are breaking below the EMA. And what we're doing right now is we're trying to test this EMA level again for that rejection. So that's what we're expecting to happen this week. On the SPY, the levels that we're going to be watching to the downside are going to be, the first level is going to be 394, 395, all the way to 400. That has a lot of, validity as to being a support level. That's going to be fairly difficult to break, but definitely one to test. The next one after that to the downside is going to be this 374 level. And then if we break that, we're going to be going down to 354. The levels to the upside, which I find very unlikely is going to happen. But if we do break up to the upside, that first level is going to be 428, which is this resistance level right up here. And then after that, the next level up from that is going to be right up here around 455. Very unlikely in my opinion, but that is my opinion. You guys do your due diligence. Like I said, that's kind of what we're going off of. We're going off of the fact that the economic data, inflation data is coming in hotter than we're expecting. We did see this break below the EMA on the daily and the 4-hour chart. The RSI is pointing to the downside, MACD is pointing to the downside, and we are expecting a sell-off to happen. So if you guys have stuck around for this long, what we are going to be trading is SQQQ, and so make sure that you guys are paying attention to both SQQQ and TQQQ. In my opinion, taking advantage of SQQQ is going to be the move for this upcoming week, or 2 weeks, depending on how long this sell-off happens for. And then rate hikes are going to happen, and then we're going to go from there. So if you guys enjoy this video, make sure to smash that like button, share this with a friend, comment down below what you guys think is going to happen with the market. Let me know, do you guys think we're going to continue to see a sell up to or push up to the upside, or if we're going to start seeing selling? Do you think the Fed's going to be raising 25 basis points or 50? Or let me know, what you guys are watching as far as, stock names, and then we can possibly break those down in a future video. So hopefully you guys enjoy this video, and I'll see you guys on next week's Stock Talk video.